My name is Mick Fennell. I'm Business Line Director for Payments at Temenos. So my responsibility is the revenue line, how we grow our payments business, looking at what do our customers looking for, looking to the future to see how we can address those opportunities for them and how we work with the customers. So it's a great role because it's global. So the amount of changes that is going on around the world definitely keeps me up at night, but in an enjoyable way, from looking at how we can improve and deliver value to our customers. I'll probably answer this with one of my Irish isms. It's, someone asks you, well, how do I get there? And I say, well, I wouldn't start from here. And so when you're talking about, how does it affect? Well, it depends what kind of financial institution you're talking about. It depends what kind of business they're in, whether they're dealing with corporates, multinationals or government or consumers, whether they're very much in the digital space. So every institution is affected differently by the changes going on. And the changes that are happening in payments are enormous, right? First of all, we have regulatory changes. So they are the mandated things that all the banks have to keep up with, the latest standards, new message types, new services like instant payments. But then layered on top of that, obviously, is competitive changes in the marketplace where you want to innovate to grow your business. And we could start talking about stablecoins, crypto, alternative payment networks. So there's a lot of new services appearing that people can leverage to create new payment products for their customers. So it is incumbent on players to figure out where they are. What is their business? Where are they going to make the most? Where are they going to drive customer growth? Where are they going to drive revenue growth? Where are they going to be able to grow their business? And so as part of that, in the payment space is looking at, right, which of these opportunities or projects do I bet on? Yeah? And that's the challenge. Now, there's also competition coming in, new fintech players. And I think more and more everyone realizes it's now about collaboration, or sometimes it's called co-opetition. So you're cooperating sometimes with your competition. And a lot of times the bank can act as a manufacturer of products and the fintechs are almost distributors. And therefore, it really is a collaborative approach where the bank can increase its volume, it can increase its customer numbers by using the fintechs as their distribution platform. And so more and more we see collaboration as the key to growth, and to collaborate with those people you're competing with so that you can kind of pick the best services possible for your customers. If we just talk about in the payment space, the standards that we all have to use, without defined standards, we wouldn't be able to send and receive payments. We have to understand what we're sending to each other. We have to know it. And that's where all of these banks that compete against each other actually have to cooperate, right? Or else, the thing about payments, it's slightly different to many other areas in banking. It really is about community and ecosystem, because it takes a village to raise a payment. You have to communicate. If you're doing lending, a lot of that will go on within your own system, or deposit accounts. You're increasing the interest rate. You're not having to send it somewhere else. Whereas a payment requires you to either receive instructions and then possibly send out more information to the clearing. So it really is all about a collaborative approach. So payments is very much community, that we all have to talk to each other. We have to collaborate with your competition because you might have to be receiving or sending payments to them. So there's lots of areas where that happens. And without that collaboration between competitors, we'd never be able to progress this industry. We'd never be able to move forward and create better services for our customers. So first of all, the cross-border space is growing, right? The volumes are constantly moving up. In fact, the volumes are increasing more than domestic volumes, certainly in the last few years. And that creates opportunity. People say, oh, there's money to be made here. If we're saying small and large players, like larger players, let's say historically banks, you had you had main correspondent banks, the big banks around the world, and they had, what they had was entities all over the world, and therefore they would have their accounts, therefore they're able to clear payments domestically in that country. So if you're sending from, the US to Brazil or from the UK to Botswana, they have entities there that can do the payment, and therefore they were able to manage cross-border payments for everyone. And large organizations, industries would have a strong relationship with one of these large global banks. The smaller banks had to create correspondent banking relationships. And a lot of the bigger banks have those relationships too, especially when you need liquidity in various countries. So those correspondent networks are how people then executed cross-border payments. And you usually had multiple relationships all over the world. What these super correspondents is basically saying, hey, you only need one connection. Connect to us, one API, and we will execute the payment for you. And we'll do it quicker and faster. About 5 years ago, the G20, through the Financial Stability Board, they created a number of objectives for cross-border payments. And so this was about 4 areas: speed, cost, transparency, and access. And they basically said, listen, we need to bring down the cost of cross-border payments. But we also need to make it more transparent so people can see what's happening. We also make it easier, more access points for people to be able to execute a cross-border payment. Yeah, and we also want this to speed it up. So instead of a cross-border payment taking 2 or 3 days, it should be near real time for you to receive the value. So these are all industry objectives with certain actual targets for 2028. And the industry is getting better. What's really interesting is that the EBA surveyed both consumers, banks, corporates and investment, and said, well, what's more important? And one would have thought they would have said cost. But now actually they said transparency. People are, and all of them said transparency, even consumers. So people are more interested in understanding, where is my payment? Where is it? And also transparency of charges. What am I getting charged for? And having that information available. So it's not just about the cost, it's about also the speed of routing and the time you get, and also where it can be delivered. So it's not just about delivering to an account, but actually I want to deliver it into a digital wallet, or I want to deliver it into a certain other token somewhere. That's the other big change that's come along, of course, is stablecoins and crypto. So we've got new assets now that store value and that can be used for moving value around. And so what we have to do is try and link the current payment infrastructure into those new digital assets so that people can transform between the two, deliver in stablecoin or receive in stablecoin, as well as fiat currencies. So these are all the changes. And if you're a smaller player, you need partners. You need to link out and be with partners and use all these services. It enables you to get to market quicker, enables you to create a bigger distribution network, but it also means that you can compete against the big guys in winning business.